What's up guys and welcome back to Wall Street Millennial. Today we're going to go over some of the biggest gains and losses on options trades from the Wallstreetbets forum over the past week. This way we can learn from the experiences of our fellow options traders. First off, we have user Fontech, who lost 96% of his portfolio, or $10,000 over the past few months. He made his losses by buying calls on GameStop, puts on Tesla, and calls on Domino's Pizza. The GameStop calls represent the majority of his losses at $6,000. GameStop stock has been on a tear this year in anticipation of the new console launches. It also benefited from a strategic investment from Chewy founder Ryan Cohen, who plans to overhaul the company, shifting its focus to digital game sales. Unfortunately for user Fontech, he bought in too late. He bought calls on a green day, and the stock subsequently tanked 30% the very next day, costing him $6,000 on his calls. After this, he bought puts on Tesla, and we all know how shorting Tesla worked out this year. He currently has one last YOLO in play, holding Domino's 420 calls that expire next week. Domino's closed at $397 on Christmas Eve, so it would have to increase more than $20 per share over the next few trading days to reach the 420 strike price. There is probably a slim chance that this will happen, given the low volatility of Domino's stock. The $10,000 that Fontech lost equates to about half of his net worth, so he still has another $10,000 left. After the unfavorable results he got from YOLOing on calls and puts, he plans to join the Theta Gang and switch his strategy to selling covered calls. While this conservative strategy won't give you Wallstreetbets level gains, it is likely to make you a decent steady income with comparatively little risk. Fontech plans to follow this strategy for the next 3 years to make back at least some of his losses. We wish you luck. Next up, we have user Fat Aspirations, who posted his Robinhood account up 555%, or more than $55,000 in less than 4 months. He also played GameStop, but fortunately for him, his timing was spot on nearly every time. He has clearly put in his due diligence on GameStop's fundamentals and was net long both stocks and options. Therefore, his portfolio chart over the past several months strongly mirrors that of the GameStop. In early December, he made a post summarizing and analyzing GameStop's earning results. In the post, he noted that GameStop's revenue is recovering even in unfavorable secular conditions due to the pandemic, and also that the balance sheet is looking as healthy as ever. Since this post, GameStop is up from about $15 per share to more than $20 a share. So what are his plays for GameStop in the future? He thinks GameStop is still long, and his preferred way of playing this is long call spreads for April, specifically with strikes of $20 and $30. He doesn't have a price target on the stock, but says that whenever the total shorts are less than the float on the market, he will start to consider locking in his gains. Good luck and congratulations on your success. Next off, we have user FlareTech, who gave a Christmas present of browser's quality loss porn to the Wallstreetbets forum. He posted a screenshot of his portfolio down 144%, or $31,000. This puts his account value at negative $9,727. Most of his losses relate to calls on Virgin Galactic, whose stock has fallen 23% over the past few weeks. Virgin Galactic makes passenger spaceships, and they hope to start their first commercial flights in 2021. But in mid-December, they were forced to abort their first powered spaceflight, as the ship's engine cut out early and the crew was forced to make an emergency landing. Luckily, nobody was hurt in the incident, but the news sent shares tanking more than 20% as it raises doubts as to when their ships will be safe enough to fly commercial passengers. While he doesn't say exactly how his account value ended up being negative, it is possible that he was using margin to make his YOLOs. This would be adding another layer of risk over investing in meme stocks, which is already risky in and of itself. Fellow Robinhood users offer advice, with Natronics31 suggesting uninstalling the app to make the losses disappear. Obviously, this advice is not true, and user FlareTech will have to resolve his negative portfolio balance one way or another. We wish you luck on this, FlareTech. Next up, we have Robinhood user Tim Riggins. He has had a very nice COVID-era portfolio performance, with a chart that resembles the outline of a dinosaur, causing him to give it the nickname the Stegosaurus. You can definitely see what he means, with a large hump for the back of the animal, and an upward swoosh for the neck and head. This nickname is also fitting, as up 475% in less than a year definitely counts as monster gains. Some Wallstreetbets users ask how he achieved such good portfolio performance. He made his money mainly on high-growth stocks like Hepion Pharmaceuticals, a small biopharmaceutical company that specializes in liver therapy and treatments, for example for alcoholics. Its stock was hit hard by COVID, but then temporarily rallied 300% before falling back down. Fortunately, Tim Riggins was able to time it perfectly, selling at the peak of $4. He also made plays on Alibaba, Okta, and Renewable Energy Group. All three of these stocks have been strong performers for most of the year. Congratulations on your Stegosaurus. Next off, we have user iRuko, who posted a screen recording of his account taking a wild ride over the last year. He started off with about $15,000 in February and quickly started to lose money as he made unsuccessful YOLOs on earnings plays. In August, his account did a spike, going up to a peak of $22,000 for a 41% gain. He was long calls on Tesla and benefited as the stock soared following the 5-for-1 stock split. Unfortunately, this gain proved ephemeral and his account resumed its bumpy ride towards zero as he continued making unsuccessful earning plays. On December 15th, his account troughed at $680 for a 96% loss. Fellow Wallstreetbets users are quick to point out that 2020 was a great year for the markets, with the SPY up almost 14%. This makes it all the more impressive that Iruka was able to buck the trend and make such astounding losses. The divergence in performance between his portfolio and the broader market can be attributed to the fact that he was playing options and not stocks. With short-term options, a small unfavorable move in the stock can wipe out your position even if the stock will recover over time. In an attempt to make back his losses this year, he plans to put everything he has into one last YOLO in the last week of 2020. He currently owns 3,400 strike calls on Amazon and $150 strike puts on Peloton, both of which expire in the next week. These options are 7 and 8% out of the money respectively, and with only a week until expiry, there is a good chance that what is left of his Robinhood account will go to zero. His only hope is that Jeff Bezos will pull a fast one and somehow pulls Amazon stock above $3,400 in the next few days. Finally, we have user Braindead Community, a self-proclaimed mentally handicapped who made impressive gains over the past several weeks. From a base of less than $9,000, he brought his account up to more than $119,000. Asking for a helmet because of his meteoric gains, some commenters suggest that he already has one. He made his gains from options and stocks, including options in United Natural Foods and St. Joe Company, and 3,100 shares of an undisclosed stock on which he's made 151%. For reasons he did not say, he cannot say what the stock was, but he says that it is a microcap drone company that trades in the range of $2 to $8, most recently around $6. The stock is most likely Parrot SA, a small French company that makes drones. This microcap stock has done very well this year, with a peak to trough gain of almost 300%. St. Joe Inc. also had a strong showing this year, up 145% with very little volatility. United Natural Foods was the weakest performer of his picks, but still up more than 82% this year. Even by Wallstreetbets standards, a 1,300% gain is very good. The trick will be to see if he can lock in those gains before he loses them. Congrats on your work so far. As a bonus Wallstreetbets post, let's take a look at one final gain, this time of proportions orders of magnitude greater than anything we've ever seen on this channel. Robinhood user Dexta claims to have $1.7 billion invested in his account. That's billion with a B. This would mean he made more than $1.2 billion on his YOLOs, and yet he doesn't post what his positions are. As the comments section points out, there are no decimal positions on the screenshot, so the image is clearly photoshopped. Other commenters talk about how he supposedly has $1.7 billion, but still uses Metro by T-Mobile on an Android.
What a joker. Angie.
Additionally, based on a $1.22 billion gain and an ending balance of $1.78 billion, that implies that he started with $557 million. That would only be a 212% gain. That's a nice gain, but the screenshot claims a 10 million % gain, a far cry from 212. But nonetheless, this post is amusing and just goes to show that you shouldn't get starstruck by other people's claims, as they can easily be manipulated to seem way better than they really are. Alright guys, that wraps it up for this video. If you like this content, make sure to like, subscribe, and share this video. If you have any recent gains or losses, let us know in the comments section below. As always, we thank you for your support. Wall Street Millennial, signing out.